Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. European futures point higher as traders weigh the prospect of a second week of volatility. Investors eye a US inflation print that could be key to next month's Fed rate decision. Kyiv accuses Russia of starting a fire at Europe's largest nuclear power plant. This as Ukrainian troops continue to hold ground gained during a surprise incursion into Russia. Plus, a new poll shows Kamala Harris leading Donald Trump in 3 key swing states. We're going to bring you the latest on the race for the White House. Good Monday morning, everyone. So European stocks and US stocks have made up essentially the losses of last Monday, but volatility, as we said in the headlines, still firmly in focus for investors. European stocks then pointing to pretty decent gains this Monday, up 0.5%. FTSE 100 futures looking to add 36 points. Catherine Mann telling the FT of the BOE, of course, that she remains cautious on inflation in the UK. S&P futures pointing flat after the gains that came through on Friday, and Nasdaq futures looking to add around 33 points. Michelle Bowman of the Fed saying more work needs to be done on inflation. Let's flip the board then and look cross-asset. The Japanese yen coming under pressure in the morning session. We've heard from a former BOJ member saying they are unlikely to hike again this year. Japanese yen currently at 147 then. A little bit of softness coming through for that currency. Euro dollar at 109. Brent, $79 a barrel on Brent, up 0.3% in the session. Gold at 2,433, up just 0.1% for the yellow metal. Let's cross over to Singapore. Avril Hong standing by with a check in the Asian markets. Avril.
Yeah, Tom, we're seeing Asia stocks climbing for a second session, and I think that sense of calm is continuing to return to the markets, making what happened last Monday look increasingly like an overreaction. But we have a lot of data to get through this week, not just from the US, but also out of Japan. And then don't forget China's data dump also later in the week. On the Japanese front, we're expecting Q2 GDP to show a return to growth versus the first quarter contraction. So this is something that could reinforce the BOJ's hawkish stance. Certainly in terms of what we're seeing on dollar yen, given that Japan markets are closed today, that might help to cap some of the volatility. Indeed, we're seeing it looking pretty range bound, but we are also seeing in stock markets the way in which the TAIEX and the KOSPI are performing well. And this is against the backdrop of some of the gains in real estate as well as the tech sector. Let's flip the board and take a closer look at some of the stocks that are in focus. This week, we're going to get earnings from some of the big Chinese tech giants, including Tencent and Alibaba, and they could give us further clues on the health of the Chinese economy as well as consumer sentiment. And our colleagues at Bloomberg Intelligence expect there to be further share buybacks as these companies seek to bolster shareholder returns. But the other theme that has emerged today as well is what we're seeing in the AI space. TSMC is reversing from the gains that we saw earlier in the day, and this was, of course, that tailwind we got from its sales figures last Friday. Honhai is another one to watch, a chip stock that could see that further boost from the AI theme as well. But I also wanted to flag an additional dynamic that we're getting out of the Taiwan stock markets. If you flip the board, you'll see that dollar Taiwan implied volatility has also surged past what we're seeing on the Chinese currency. And to some of our strategists on the MLive team, this shows that we could suggest that we could actually see a positive turning point for the Taiwan currency, and that is in turn something that could bode well for Taiwan stocks overall. Tom.
Avril Hong in Singapore with a market check over in Asia. Thank you very much indeed. And Avril, of course, talking about some of the data that's going to be crossing later this week out of China, but also out of the US. We've got inflation in the UK as well on Wednesday. Renewed recession fears, meanwhile, meaning investors will be closely watching that raft of economic data, particularly in the US, of course, through this week. We have CPI data on Wednesday, retail sales on Thursday. Let's bring in Bloomberg MLive strategist Mark Cranfield for the take on this and how investors are gearing up for a big week on the data front and expectations of some pretty decent-sized volatility moves, or moves around volatility in the lead-up and around that CPI print on Wednesday out of the US, Mark. Why? What are traders expecting on that front?
Well, it's not just because of the continued fallout from the yen carry trade being unwound. It's also because specific US data seems to be exciting people more than it has for several years, really. If you think back to the US employment report at the beginning of the month, the market reaction was enormous after we had a 4.3% print on the US employment data. And then we similarly had a big reaction last week when the jobless claims number was actually better than the US employment report. So traders have gone swinging from one way to the other. We're unsure whether there's still more of these yen trades to be unwound. There may well be. Some people think it's 75% done, but I don't think anyone's relaxing about that. And then when you consider that how much is priced in terms of interest rate cuts from the Federal Reserve, you can see why people would expect, whatever the data is, there will be some decent move in the markets after the CPI is released, because traders clearly are taking positions ahead of it. You've also got the day traders coming back in much more in force. They're obviously encouraged by the fact that once the data actually is released, that there's still plenty of action for them to trade, even on a very short-term basis. So if you put all those things together, people really will be taking this CPI event and probably some of the other data which will come later in the week as well. They'll be seeing that as a chance for them to move their markets to actually make decent P&L on the day, which is always something that momentum players love to do.
Yeah, put and call options showing traders then positioning for a move around the S&P of 1.2% roughly in either direction on Wednesday. Meanwhile, Mark, we've been hearing from Michelle Bowman, and she sounds pretty hawkish, pushing back on expectations, or at least on the view that inflation has been properly contained in the US as we lead up, of course, to that crucial CPI print on Wednesday. To what extent, how much vulnerability is there in these markets to further pushback from Fed officials around rate cut expectations?
Particularly in the bond market. We got a taste of it last week. We had that 10-year Treasury auction where it came in below 4%, even though that was a pretty tough ask for it. And the market didn't like it very much. Yields backed up a little bit. We've come down a touch since then. But you can tell that anything on the 10-year below 4% is not easily absorbed, particularly when you've got the Fed funds rate still at 5.5% for now. Even if the Fed does cut, they would obviously prefer to go by 25 basis points. They don't want to show panic in the market. So clearly there's a big standoff here between traders who think maybe 50 basis points is still possible and a lot more coming down in the months afterwards. And it's very much priced into the Treasury curve already. So the curve is still slightly inverted, but especially if you look at 10 years, on the 3% handle, that is really the part of the market that could move a lot. If the numbers don't justify what traders have done in terms of their positioning, that's where the big swings will come. And Fed speakers probably don't mind a bit of pushback here. If they can see the 10-year go back towards something like 4.25, they'd probably feel more comfortable. It must be a little bit nervous for them to see it on a 3% handle, because we actually touched 366 just recently, and that would suggest that the Fed is way, way behind the curve, and that's not something they want to live with. So yes, an inflation number in line, a little bit of higher yields. Fed won't be too disappointed.
OK, market's still pricing in about 100 basis points of cuts by the end of this year, of course, from the Federal Reserve. Mark Cranfield with the preview, of course, in terms of how these markets are likely to adjust around that inflation data out of the US. From our MLive team, Mark, thank you very much indeed. To US politics now. Vice President Kamala Harris has opened up a narrow lead on former President Donald Trump in 3 battleground states, according to the latest New York Times Siena poll. For more, let's bring in Bloomberg's EMEA News Director, Ros Mattison. And Ros, the new ticket then, we know it's translated into momentum, at least within the Democratic base. The enthusiasm is there. The rallies attracting thousands of people, 15,000 on the latest count. But what the question had been is to what extent that was translating then into an improvement in the poll numbers. And now we have evidence that suggests, at least in these snapshot polls, that the needle has moved for them.
Well, that's right. So it's showing that she's continuing to have some momentum from the initial days, and that's going to be crucial for her. And what we're seeing is she does seem to be making inroads in these swing states. It's kind of not that much outside the margin of error in these polls, but it does show that she's in front, and that's really important. And the pairing, obviously, of Harris with Tim Walz, her vice president nominee, is also going to be important because he can bring in some of those voters as well. The question is, in these swing states in particular, how is she going to go when it comes to polling on economic policy? And there she's a little bit weaker still. Donald Trump is still seen as someone who's more reliable to lead the US when it comes to economic policy, and that's going to be really the key area for campaign campaigning in the remaining months through to the November election is who's going to be the better steward of the economy. And we're going to see her start to come out now with more economic policies, put some flesh on some of those promises that she's talking about. And there she's going to have to really lay out a clear economic plan if she's going to continue to make those inroads in those key states.
OK, so scrutinising the plan in terms of the economic policies from Team Harris and Wolves, of course. Meanwhile, the fundraising story is pretty fascinating in terms of the turnaround there, because, of course, Trump had this lead in terms of raising funds. He had a pretty decent war chest. This was prior, of course, to Biden stepping away from the competition and from the nominee. How has that changed?
Well, obviously, some of Biden's war chest came over to her. But as you say, she's also raised a lot of money herself. In July, she raised more than $300 million. She raised quite a bit in the 24 hours after she announced her vice presidential running mate, her nominee, Tim Walz. And so Trump is still saying he's raising, $20 million from these rallies. But he's not actually been out on the road that much in recent weeks. He went a bit quiet in the aftermath of this and is sort of obviously trying to regroup at how to come at her now in the campaign. So he's not been campaigning as much, whereas she's been out very quickly already in these swing states. So we can see $300 million in July off her own bat is pretty impressive. We know she's getting that from small fry donors. We know she's getting it. She was in California getting it from very big ticket Democratic donors. So she's now got quite a lot of money behind her.
OK, we watch, of course, for the interview that Elon Musk is meant to be holding as well with Donald Trump, the former president, later today. Of course, Elon Musk has backed the former president, says no questions are off limits in that interview. We'll see what comes out of that. Ros Mattison, thank you very much indeed with the update in terms of the US political scene and the fortunes of both parties. Here's what else we'll be thinking about then in terms of the day ahead for you. Today, the OPEC oil market report is going to be interesting, particularly given the pricing that is factoring in now into the energy space on the geopolitical front, but concerns in some quarters that the demand is not there at a time, of course, when the summer driving season stateside had been expected to put something of a floor under prices. So we'll check in on that oil market report coming out of OPEC. Also some reporting out of Bloomberg in terms of refiners in the US reducing their output as well, suggesting maybe there's a surplus in terms of oil building up in the States. On Tuesday, producer prices, so PPI going to drop on Tuesday. That's, of course, leading up to the CPI print on Wednesday. So by the end of Wednesday, we'll have a much clearer picture of the inflation dynamics of the US and what that could mean for this Federal Reserve. And then on Wednesday, here in the UK, inflation data as well. Important, of course, in terms of how we price the next move for the Bank of England. Catherine Mann, speaking to the Financial Times, clearly a hawk, of course, on the MPC, saying she is not convinced that enough work has been done on inflation, concerned about services and wages. You can get a roundup of the stories you need to know to get into your day in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, Hamas responds to calls for a new round of ceasefire talks with Israel due to begin this week. We have the details live from Jerusalem next. Plus, our exclusive interview with OneTech co-founder Emma Obanye. That is coming up later in the show. Questions about how the UK government is looking to potentially regulate social media after the riots of last week. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Hamas is calling for a plan to implement a ceasefire with Israel instead of a new round of talks. Meanwhile, Israel says an airstrike that killed about 100 people at a school in Gaza targeted a Hamas command centre. Bloomberg's Dan Williams joins me now from Jerusalem for the latest. Dan, a new round of talks and ceasefire talks due to take place on Thursday of this week. We've been here before. Are there any chances, or what are the chances of success at these talks?
Well, there is still some uncertainty around the prospect of these talks. For example, we don't even know what the venue would be, presumably either Cairo or Doha, given that those are the capitals of the two Arab countries that have been mediating between Israel and Hamas. The reason that in this part of the world there is some optimism is the fact that so many major players have gotten behind this. In fact, this date, this convening of the parties was announced in a joint statement by Qatar, Egypt, the mediators, and the United States. And we understand that a number of senior US delegates will be coming in this week to shepherd along those talks. However, Hamas, which is obviously a very important party to these talks, indicated yesterday it's not happy about the plans. It indicated that it does not want another round of talks and that it just wants what has been agreed so far to be implemented, specifically by Israel. It's worth remembering that Israel has in turn accused Hamas of trying to throw spanners in the works with its own requests for changing the proposal. Now, we're hearing this morning that the Israelis are not necessarily fazed by this Hamas announcement. They say that the plan is for the meeting to go ahead and for Hamas to be briefed after the meeting. So this would appear to be a preliminary yet significant meeting aimed at kickstarting talks that have been really idling and stuttering for several weeks now.
And meanwhile, looming over those talks set, as you say, for Thursday, is the still continuing risk that Iran retaliates, as it said it will, Iran and Hezbollah, against Israel, of course, for the assassinations of those leaders, both in Lebanon and also in Tehran. Is this Iran? It's been 2 weeks now. Is this Iran having second thoughts or planning something more significant?
It might well be. Of course, we have no way of knowing. Presumably, there are pure tactical considerations here. For example, the timing, the target, the element of surprise, calculating what Israel's retaliation for the retaliation might be. But it well might be that they are keeping in mind these truce talks because there is a direct linkage. Hamas is an Iranian ally, an Iranian asset. So is Hezbollah, so are the Houthis. In fact, what began as a war in Gaza is now a multi-front war really between Israel and Iran's proxies. So the Iranians have said that Israel should enter a Gaza ceasefire. So has Hezbollah in the past. So have the Houthis, in fact, in Yemen, who've been joining the fighting. So presumably Iran and Hezbollah are mindful of the prospects of these truce talks being successful, as they would deem success, and think that perhaps this might not be the good time to upend those talks by carrying out an attack. On the other hand, they may choose to carry out an attack before the talks in order to draw a line under the retaliation and be recorded as having carried it out as promised. So time will tell, but there is a countdown now to Thursday. The Israelis are certainly in a high state of alert. No one is taking anything for granted. I think the big question is, do Iran and Hezbollah, have they themselves decided what they want right now? Obviously, no one is saying, but expectations are high that there might be a breakthrough on Thursday diplomatically, but there also might be a vector of escalation should indeed that promised retaliation take place now, something like 12 days after it was first promised.
OK, Bloomberg's Dan Williams on the ground for us in Jerusalem on another potentially significant week, of course, for the region. Dan, thank you very much indeed. Now to other stories making the news this Monday. The chair of India's market regulator is strongly denying claims by Hindenburg Research of conflicts of interest related to the Adani Group. Hindenburg published a report on Saturday saying that the chair and her husband invested in offshore entities that were allegedly part of a fund structure in which billionaire Gautam Adani's brother Vinod had also invested. Hindenburg says the investments were made 2 years before Bush was appointed to the Securities and Exchange Board of India. The couple calls the allegations baseless. Philippine President Ferdinand Marcos Jr. has blasted actions by China's Air Force against a Philippine plane over the South China Sea as unjustified, illegal and reckless. That's after a video purportedly showing a Chinese plane dropping flares into the path of a Philippine Air Force patrol. The incident happened as the two sides are trying to ease maritime tensions. Coming up, Africa's top gold producer opens a new refinery aiming to produce 400 kilograms of the yellow metal every day. The latest on that Ghanaian refinery is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday. Now, Ghana, Africa's biggest gold producer, has opened a new refinery plant. The Royal Ghana Gold Refinery aims to produce 400 kilograms a day, sourcing raw material mainly from small-scale mines. The government holds a 20% stake in the public-private partnership with Rosie Royal Minerals of India. Let's bring in Bloomberg's Ondiro Oganga for the details then, joining us out of Kigali. Ondiro, what is the likely upside then of this new development? How significant is it?
Tom, this could be a gift that keeps giving. One, it will make sourcing for gold easier for the central bank because this refinery brings gold right at their doorstep. It will make it easier for them to build up their reserves and show up their FX. Also, as you mentioned, Ghana is one of the top 10 gold producers in the world, and by adding value, they'll be able to tap into bigger benefits in the market that they were missing on before. But at the core of this deal also is formalization of artisanal mining, which accounts for about a third of the total output in Ghana, yet it's marred with irregularities such as illegal mining and also smuggling. So by formalizing this industry, the government is giving them a ready market. Also important is they'll be trying to get certification from the London Bullion Market Association. But before that happens, a couple of issues will have to be addressed in their value chain, including child labor.
OK, so they have to address that important issue. And meanwhile, there's a political element to this as well, Ondiro, with the vice president suggesting that maybe you could peg the currency to gold, so gold-backed currency standard. What are the details around this?
Tom, we have to put a big if on this because this was said during the campaign trail and politicians have a tendency of over-promising and under-delivering. But all factors constant, the Ghanaian currency has gone through a tumultuous time. At the peak of the tumble, it lost 60% of its value to the dollar and inflation hit 54%. And even though things have been cooling down, we are seeing the Ghanaian currency this year again has lost 23% of its value to the dollar. So should December come and the vice president wins the general election, a couple of things will have to be put in place. But if they go down this road, they'll be joining Zimbabwe, who adopted the ZiG, a gold-backed currency, after their currency depreciated by 80%. OK, Ondiro Oganga in Kigali, thank you very much indeed. On prospects of ramped up gold production out of Ghana, of course, what it could mean politically, potentially, in terms of alignment with the currency. Let's check in on commodities right now. We'll start with the gold price, which is holding its line currently at $2,432 per troy ounce on the yellow metal. So upside of about 0.1% for gold. And of course, it's rallied year to date. Part of that down to geopolitical risk hedging, but also, of course, expectations that maybe you get rate cuts coming through from the Federal Reserve. That could prove supportive as well for gold. Iron ore, though, very different story in the session so far. A combination of factors coming through then for iron ore, which is currently down 2.3%, as you can see. Part of that is down to record production coming through from the likes of Australia at a time, of course, when demand in China, one of the key consumers of iron ore, the key consumer of iron ore, is continuing to show weakness. So it's a combination in terms of that supply-demand effect. Very strong supply, softened demand, and iron ore then just down 2.3% so far in the session. So let's watch basic resources in terms of the sector, particularly here in the UK at the open at 8 a.m. UK time. Copper, Dr. Copper, showing a little bit of pressure, just down 0.1%, still holding above 8,850. But you'll remember earlier this year, of course, you crossed through record levels, breaking through 10,000 on copper. Now well below that, 8,850, just down 0.2%. Coming up, Russia hits back at Ukraine a week into Kyiv's biggest incursion into Russian territory since the war began. We get the details on that story next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. European futures point higher as traders weigh the prospect of a second week of volatility. Investors eyeing a US inflation print that could be key to next month's Fed rate decision. Kyiv accuses Russia of starting a fire at Europe's largest nuclear power plant. This as Ukrainian troops continue to hold ground gained during a surprise incursion into Russia. Plus, a new poll shows Kamala Harris leading Donald Trump in 3 key swing states.
we'll bring you the latest on the race for the White House. So European futures pointing to gains as we kick off the Monday session, of course, or looking ahead to kicking off the Monday session at 8 a.m. UK time, of course. But you're looking up by around 0.5%. Worth noting as well, European stocks have made up all the losses, of course, that came through after that volatile and historic day last week. This time last week, of course, the market slump that we saw, well, those losses have been paired. European futures pointing up now by 0.5%. Here in the UK, the FTSE 100 looking to add 33 points. We look at basic resources, iron ore a little softer in the session. S&P futures flat currently after the gains that came through on Friday. Michelle Bowman of the Fed saying she's not convinced that the work has been done yet in terms of the inflation story, apparently pushing back on rate expectations for the Federal Reserve. And of course, you're going to get CPI and the inflation print on Wednesday out of the US, and then retail sales on Thursday. Nasdaq futures pointing to gains of 30 points. Let's flip the board and look across our set. Japanese markets closed, but we check on the Japanese yen, which continues to trade. A little bit of softness coming through for that currency right now at 147. Meanwhile, on the euro, 109 versus the dollar, flat in terms of the single currency. $79 a barrel on Brent, up 0.3% in the session, and gold at 2,432, just up 0.1%. Let's get to geopolitics now. And Ukraine's president says Russian troops have started a fire at an occupied nuclear power plant in southern Ukraine. Russia seized the Zaporizhzhia nuclear power plant in March of 2022. That's shortly after it launched a full-scale invasion of its neighbour. Volodymyr Zelensky said late on Sunday that radiation levels were within a normal range at the plant, which is the largest in Europe. And Zelensky is urging allies to allow Ukraine to keep striking into Russian territory after launching a surprise cross-border incursion last week. Ukraine accused Russia of striking Kyiv with North Korean missiles. For the latest, Len, let's bring in Bloomberg's Tony Halpin, who joins me from Dubai and follows all this very, very closely indeed. So, Tony, in terms of this incursion that we saw last week, and it took a while really for the details to come to the fore, and we've had no official confirmation from officials in Kyiv, but they've nodded to it. What do we know? What are the military saying? How significant is this?
Well, I think it's fair to say there was a great deal of shock in the Kremlin at this turn of events in the war. You have to remember that this is the first time a foreign military has been on Russian territory since World War II, and President Vladimir Putin looked pretty grim-faced when he was receiving reports from the military last week, and the chief of the military was assuring him that this was being dealt with. Certainly Russia's been rushing reinforcements, tanks, artillery, troops to try and hold the line and push back against the Ukrainian incursion. But so far, as you say, they haven't succeeded, and there's every evidence that Ukraine is attempting to expand its presence on Russian territory.
It very much seems like a high-risk move on the part of Ukraine, Tony. Do we have clarity on what their objective is?
Yeah, they've been keeping their cards very close to their chest. I mean, there's all kinds of theories. One was simply that they were trying to divert pressure on the front in eastern Ukraine by indeed forcing Russia to move reserves and resources back into its own territory to counter this incursion. But there are other theories that suggest that maybe it's trying to seize territory for some kind of bargaining chip later down the line against Russia, which, as you know, still occupies a proportion of Ukraine. And also simply to pressure Russia by bringing the war directly to its people. There are tens of thousands of Russians now who have fled the fighting, and Russian state TV is trying to play down this incursion by emphasizing the degree of help that people are being given as they flee their homes. But these are not images that Russians expect to see about their own country. And that's very much a morale boost for Ukraine and a psychological hit for Russia.
OK, so that's on the incursion, and there's a lot of lines coming through from Ukraine in terms of this conflict. And one of them is around this Zaporizhzhia nuclear power plant that occupied a lot of our attention, of course, last year. A lot of angst, global anxiety about the prospects, or at least the risks around that nuclear power plant, of course, occupied by the Russians. Now Ukraine saying that there's been a fire started. Is there a risk of radiation here? What do we know about what's going on at that power plant?
Yes, this is Europe's biggest nuclear power plant, and the International Atomic Energy Agency is demanding access so that it can check on both the source of this fire and any consequences. They say at this point that there's no sign of any elevated radiation risk, but clearly there are some discussion there about what caused this fire. There are reports that perhaps it was the result of a drone strike, And the IAEA have been very, very concerned to ensure that this nuclear plant doesn't become the scene of exchanges of fire. So they'll very much want to know what the cause was and what the outcome and the damage has been.
OK, Bloomberg's Tony Halpin with the latest on all of those lines, the incursion, of course, and the risks around that nuclear power plant, with the lines crossing, of course, from the IEA wanting access and an update there. Tony, thank you very much indeed for the latest. Here's what else to be watching out for this week then. OPEC Plus, their August oil market report will be crossing. We'll get the details on that as the demand picture starts to fray around the oil complex, particularly out of China and the US. Of course, that driving season, summertime driving season in the US, doesn't seem to be paying off in terms of a large tick up in demand. So question marks there in terms of the outlook for oil, maybe some clarity on that report. Meanwhile, on Tuesday, the US budget balance. We're also going to get unemployment data out of the UK. So we'll touch on the labour market of the UK. That, as we're hearing from some of the more hawkish members of the MPC, suggesting that the strength in wages will continue here in the UK. Meanwhile, on Wednesday, as we lead up to the CPI print later, we're going to get the US PPI print, so producer prices as well, and then, of course, CPI on Wednesday. On the earnings front, UBS, that's a big one. We'll be all over that story, of course, for you in terms of the details around how they're continuing to integrate Credit Suisse, the prospects for that Swiss lender, and we're going to be getting US and UK inflation data as well on Wednesday. Those are the big prints, of course, for both the Fed and the BOE. On the Thursday, there is a detail in terms of the earnings front on Walmart, Alibaba and JD.com, so a gauge on the consumers of the two largest economies in the world, China and the US, of course. Meanwhile, Indian Prime Minister Narendra Modi will give his first speech of his third term, having to, of course, share some of that power after a less successful election outcome than maybe many of his team would have helped. That's on, or hope for. That's on Friday. We're also going to get University of Michigan August consumer sentiment and US housing starts details on Friday. Narendra Modi's speech on Thursday, the details around the data and the sentiment survey on Friday out of the US. Talking of the US, former Treasury Secretary Larry Summers says an emergency rate cut from the Fed would be unwarranted. Summers spoke on Bloomberg Television's Wall Street Week with David Westin after a week, of course, of market volatility.
On current facts, given that there has been some recovery, given that volatility has come way down, we're not out of the woods. You can't be certain. The Fed certainly needs to be watching carefully, but I think an emergency response would be lurching, panicked, overheated, and counterproductive on current facts, which doesn't mean that the Fed shouldn't be watching very closely. Before they have another decision to make in September, there's going to be a lot more data that's going to come in. And I think they should make clear that they're going to be watching all that data and they're going to make a decision reflecting the need to balance the concern of making sure that we have stopped inflation with the concern of maximizing employment. And I think they need to not be pressured into specificity of a kind that is impossible. And when this Federal Reserve has made mistakes, the mistakes have been of overconfidence and overly firm statements that prove to be unwarranted in light of the data as it evolved. And so I think they just need to say they're watching carefully and they'll do what's appropriate. But certainly no move between meetings. It may be that a 50 basis point cut is appropriate. We just don't know. Anything's possible. The huge excitement about 75 basis point cuts that followed immediately after Monday, I didn't think any of that was warranted at that early stage.
Larry, let me pick up on one of the things you mentioned, was volatility. The VIX really did spike up to, I think, over 60, maybe the highest it had been since the pandemic first hit. How much attention should the Fed pay to that volatility index, what it might be telling us about how the markets are functioning?
I actually think that the SEC and the relevant exchanges may want to pay a bit of attention. My understanding is that because there are some illiquid instruments that go into the calculation of the VIX had a somewhat artificial movement on Monday, that if one looks at the VIX futures, which are a somewhat different instrument, the movements were much, much less dramatic. So I certainly had my attention caught by the VIX early in the day on Monday. But as I have looked into it, I think you were learning more about issues around liquidity in the options markets than you were about some profound reassessment of the American economy.
Former Treasury Secretary, of course, Larry Summers speaking there, giving his view on an emergency rate cut from the Fed, pushing back on the views of Bill Dudley and Mohamed El-Erian, who, of course, suggested the Fed is behind the curve right now in the need to cut. Here are some other stories making news this Monday then. Greece on high alert that as wildfires break out in the area is close to the capital, Athens, of course. Yesterday, residents fled their homes as around 250 firefighters worked to contain blazes in the area, about 35 kilometres from the capital. Since mid-June, Greece has been hit by thousands of wildfires as the heat wave persists, with their frequency and intensity linked to climate change. In corporate news, Disney has unveiled new theme park attractions days after reporting weaker-than-expected results from the division. Plans include a new area devoted to movie villains within Florida's Magic Kingdom, as well as Spider-Man attractions in Shanghai and Hong Kong. Disney is also planning 4 new cruise ships, bringing its fleet to 13. Last year, the company announced it was planning to spend $60 billion over the next decade on expansion plans. And the Olympic Games in Paris has drawn to a close, with the United States topping the medal tally. The US won 126 medals in total, 40 of them gold. China also won 40 gold medals, taking second spot. Japan, Australia and France rounded out the top 5. The games of the 33rd Olympiad were celebrated with a closing ceremony last night at the Stade de France. Mission Impossible star Tom Cruise, as you can see there, gave this ceremony its Hollywood moment, abseiling into the stadium, a nod to the next games, which will be hosted by Los Angeles in 2028. You can see him there on the back of a motorbike, of course. Paris will host the Paralympic Games in 2 weeks' time. And talking of those gold medals, 40 for the US, 40 for China, there's a bit of detail, a bit of reporting coming through from Bloomberg in terms of the value of those gold medals. And the value is around $900 each. That's thanks, of course, to the run-up we've seen in gold prices and silver prices, because the gold medals are actually made up 92% silver, the rest is gold. And, of course, the run-up in gold prices, the run-up in silver has made these the most valuable medals on record, again, according to Bloomberg reporting. But Olympians, of course, they don't tend to melt down their medals. They're probably not going to take advantage of that way. The medals also contain a small piece of the Eiffel Tower. Other luxury or other lucrative gifts given to Olympians from countries around the world include cash, exemptions from military service, and cows, apparently. So there you go. Cashing in, possibly, in terms of the victories coming through from the Olympics. Coming up, the UK moles, how to better regulate online misinformation. That's more than a week after, of course, unrest in towns around the country. Our exclusive interview with OneTech CEO Emma Obanye is next. How tech is adjusting to some of those concerns. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, British Prime Minister Keir Starmer has warned online content is, quote, not a law-free zone, saying the government needs to look more broadly at social media after misinformation stoked days of rioting here in the UK. The UK mulling steps then to tighten the regulation of platforms like Elon Musk's X. but acknowledges it has few levers to tackle the problem. Joining us now is Obanye, the CEO and co-founder of OneTech, which is an organisation focused on trying to ensure there is a more diverse platform of talent getting into this booming UK tech sector. It's a tech sector, of course, doing very well, but a lot more needs to be done in terms of getting female entrepreneurs the kind of support they need, and, of course, entrepreneurs from different backgrounds and different diverse backgrounds. Obanye, then, CEO of OneTech, thanks for joining us. Let's start on the question of what the government should be doing, how you and the team have been thinking about the role of social media, the government blaming some of these platforms for stoking these riots that we've seen in the UK. Not just the government, of course, the evidence is there that a lot of misinformation has been spread. So technology has actually played a role in the unrest that we've seen and the violence that we've seen in the UK over the last week or so. How do you think the government should be approaching this, Emma?
I think that we all need to understand, and there's almost a reminder that actually AI isn't a feature, it's a transformation of sorts. And so, when it comes to policy, when it comes to law, I think we need to see changes being made. We need to see, these technology companies taking accountability. And we're moving very, very rapidly at the moment. And so we need to make sure that there is accountability and that we start to see that closer relationship being formed in order to tackle these challenges of the future.
And when it comes specifically on the regulatory front, Emma, are there a set of policies that you would reach for on this front? Because, of course, you work with entrepreneurs who want a space in which to innovate, but there's that balance, isn't there, between having an environment that is supportive of innovation, but also having a regulatory framework that tries to limit some of the worst excesses of some of these technologies.
Yeah, I think it's just about, look, especially when we're moving into this AI front, we need to, it's all going to move very quickly. So there aren't any specific policies as such, because as soon as they come into force, we may find, some other challenges that confront us. But what I think it does take, we need to see the policymakers, we need to see government working very closely with these technology companies to come up with innovative solutions. It isn't just like, we can't put a plaster on this. We have to acknowledge that it's going to keep evolving as technology moves at this fast rate.
Talk to us about more broadly in terms of that diversity and inclusion push within the world of tech. And there's a lot of work to be done on that front. I just wonder, you get the likes of Elon Musk, of course, so prominent within the world of technology in the US, lambasting efforts around DEI. How does someone like Musk make that mission of yours that much more difficult?
Yeah, I think it is challenging because, it's almost like, creating this combative nature around it, when actually it's about how can we extract the most out of our workforce? How can we make sure that all people are primed and ready for these jobs of the future? And at the moment, what we're seeing is an use of many people in society. It's not just women, it's also people from lower social economic backgrounds or differing social economic backgrounds. And so what we need to have is a sustained push to make sure that everybody has the best chance of being able to take up these opportunities. Because as you say, they are lucrative and they are really, really, important for our economy moving forward.
I talked about Musk. He is one of those voices in the US. But you've had a broader pushback against DEI, diversity, equality and inclusion in the US. There has been that pushback, and you see that politically as well within parts of the Republican Party. Are you in the UK? Are you seeing a similar pushback to some of these efforts?
Not really. I think that we have to understand that the UK and the US have very different histories, and are coming it from different points. And also, our Equalities Act has been in place for quite a bit of time. And so I don't think we're going to see the same sort of level of pushback as we're seeing in the US. But obviously, we have very similar cultures and it's not helpful. That's for sure.
What should the VC industry be doing, Emma, do you think? What the role of the venture capital industry here in the UK to ensure there is a more inclusive environment, that you are getting that untapped talent into this tech sector?
Yeah. I think there's a lot that's been done over the last 10 years or so to both educate all sides of our ecosystems. But what we're seeing is not much has changed. So actually, I don't think it just lays with the VCs. I think it lays with everybody that's involved in our ecosystem. So all of the stakeholders, entrepreneurs themselves. And I think we have to have a sustained look at the actual pipeline. So yes, we're seeing that only 1.8%, for example, of money has flowed to female founders in 2023. But actually, what does the full pipeline look like? And what impact do, other societal factors have, such as, maternity leave or even things like that? It's quite tricky.
Okay. Emma, thank you very much indeed. We've run out of time, but we appreciate your insights this morning. Emma Obanye, CEO of OneTech. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We've been putting out the line that potentially there's going to be another volatile week this week, given the data that is on the docket. Of course, front and centre for these markets will be inflation print, CPI, of course, dropping stateside on Wednesday. And when you look at some of the options market positioning, you see that volatility being priced in by some traders at least. Expectations, you look at puts and calls around the S&P on that print on Wednesday, you're looking for markets positioning for downside and upside of around 1.2%. This chart shows the costs of insuring around a 10% drop in one of the largest ETFs tied, of course, to the S&P, the SPY, and the cost of that, the highest level that we've seen since about October. That is protecting around a potential 10% decline. Just bear that in mind on this week of data and potential volatility. Let's flip the board and have a look at a very different story, because also this week on the data front, we're going to get more details in terms of the data front of China. We know the softness is there. The inflation data remained concerning last week. But in terms of what this is meaning for foreign investment, the outflows are now pretty pronounced. Don't forget, it's just a few years ago, you can see that you were getting record high levels of investment into the Chinese market. In the most recent quarter, you saw a significant drop, outflows of about $15 billion. If that trend continues, it'll be the biggest losses since the 1990s in terms of outflows. The opening trade is up next. This is Bloomberg.